Hey, good evening. Dan Fitzpatrick here at stockmarketmentor.com. By the way, before I get into ARK here, just wanted to give you the heads up that you're going to start getting a couple emails. I believe it's tomorrow. They're all ready to roll, probably around noonish, something like that. I'm telling you about some important things in Stock Market Mentor, what's happening. And so I'm just giving you the heads up on that so you can't say, well, nobody ever told me. Okay, so with respect to ARK, this is kind of starting to look like a pretty good setup. Here's the weekly chart here, and you can see where the stock's pinching, right? Okay, on the daily chart, you can see kind of a similar situation, only on the, don't pay attention to the moving averages as they were on that weekly that I just showed you. Like this would be kind of more of the, where they really are, the 200-day moving average or the 40-week. Down here. But what I like about this is here's a momentum indicator, and there are a lot of them out there. You don't have to use this one. You can't use this one. I just kind of made it up. But you can use any momentum indicators, and you can see the stock really doesn't have any momentum. So on the daily chart too, the same thing. It really does not have it doesn't have any momentum. You can look at MACD, the rate of change, any of that stuff. It's all pretty flat. But what I like about this is it's kind of giving you a low risk, a defined risk entry. And this is how you do that. You look and say like, okay, well, this is where the lows are down here. And so if I like ARK, even though I know that last year a lot of this was due to manufactured gamma squeezes by SoftBank, as well as that dude Wang, Hung, whatever it is, that blew up his fund, ARKK. They were creating, and good old Kathy knew these guys well, and so this was kind of orchestrated. However, you can't argue. You can't argue with the price. So to look at a price like this, a stock chart like this, and say, well, that doesn't matter because they kind of manipulated the options market and they created a squeeze. Okay, dude, whatever. Price is price, man. I don't care why a stock goes up. If it's going up, I want to be in it. I don't care if it's because there was a barking chicken riding on a blind dog, and people decided to buy it. I don't care. If a stock's going higher, then I'm a buyer. That's just the way it is. So all during this last run here last year, you can't argue with that. With that said, though, that game is pretty much over. And this is an actively traded ETF. Okay, so while ARK has been floundering, the Qs, which aren't actively traded, the Qs have just kind of kept going higher. And so hence this idea that an actively traded fund is just going to go up and up and up is silly, because it's actively traded. And I don't mean the actual ETF itself. I mean the underlying stocks. One day they've added, 5% of Tesla. The next day they sold, 8% of SnapTwit, or any of that stuff. So it's a rotating, flowing thing. It's money flow in and out and back and forth. But what really makes this thing go is not the holdings that it has. It's the money that's actually buying ARKK. And then the money that is selling ARKK. As there is more demand, ARKK runs higher. When supply starts to outstrip demand, ARKK falls lower. It doesn't matter what's in it. What's in it doesn't impact anybody, because this stock trades on the perception of the public. So let me get back on track. The perception of the public. Back here, Kathy Woods can still do no wrong. I think she's almost like the Elliott wave now, or Fibonacci for that matter. It's a religion. And so, and that's, that's the way it is. That's the way it is with this stock. But what I'm looking at is just pure and simple the price action. Last year was last year. It's not this year. And so when I look at this and I see flat momentum on the daily chart, and then I see on the weekly chart pretty flat momentum too, with a little bit of upward bias, and the stock just resting just a little bit below the 200-day, a little bit below the 200-day moving average. That's the red line here, excuse me, the 50-day moving average. Sorry, I know why this was, I knew something was goofy. I had exponential moving average on the 200-day moving average, stupid. It's just simple moving average. So this stock on the daily chart is below the SMA. And by the way, you could say, well, why don't you use exponential? It's faster. Dude, I don't want it to be faster. I want it to be the average price of stocks over the last 200 days, not less than that. Not like, oh, well, let's give more weight to the most recent prices. That's what I want to do. Dude, do that on the 8-day moving average, but the 20-day moving or the 200-day moving average, completely and totally irrelevant. So it's simple. There, I digressed. The bottom line, though, is so this is now below the 50-day and the 200-day moving average, but not by that much. And it's kind of setting up into this little wedge pattern. So what you may want to do is you may want to watch this stock. Frankly, even if you took a little bit right now, you can put a stop maybe 5.5%, perhaps 6% below that level, and you're okay. But the idea is you want to see the stock break out. You want to see it break out above, say, 125 on some pretty good volume. And if it's here and then it's up to 125, that's 5% above where it is right now. So again, you could take a little position in this stock now and then buy more when or if it breaks out. I think it ultimately will. That just seems to be the way this religion goes. And so you want to be in it a little bit before that happens. That way, even though you're buying more at 125 or 126, your average cost basis is below that because you got in at 119. So anyway, that's the way that I would be trading ARK. So I hope this works for you. I'll see you next time.